Okay, how to start getting married. All right, now I need y'all to get in a comfortable spot. If y'all got a recliner, I need y'all to slay back in the recliner. Okay, I'm about to start saying some things to y'all. Okay, let me chill. I'm gonna stop now. No, for real. I'm excited because this is the beginning of really getting on to showing you guys how you're gonna start making money. Man, this is the beginning of this. How to start getting married. Now, I wanted to do a little play on words because I'm goofy. I'm a goofball. Okay, that's why I wanted to do that. But this is going to be the way of really beginning of how you're going to start making money. Is how to do this. Okay. So some of the things that we are going to do, guys. Now we've done the important task, which we're on the monthly, right? We're understanding about current market price. Okay, that none of that stuff changes. Now, what we're starting to do is we are going to bring and utilize everything that we've been taught near this point, meaning that we are going to start bringing in our Fibonacci. We're going to start looking at support and resistance, the trends. I mean, all those things are going to play a role. But now is the part where we now bring in our most critical tool to actually doing this, okay, which is our fib. Now, you're going to always start off with the monthly, right? You're always going to pull it out and look at everything as a whole, right? Like this is as a whole right here. And then when we get to that point, guys, we're going to come over and we're going to pay attention to structure. Now, what I am wanting you to pretty much realize and recognize is the current excitable moves that happen in the trends, okay? Like this is the current excitable downtrend move. Like we can clearly see that. We can clearly see that this is an uptrend happening out of that because we can see it clear this area over here. We can see that happening. Those are all things that we want to pay attention to. But now is how we start to get our marriages in trading, okay? And I don't want you guys to overcomplicate this. Just flow with me as we do this, okay? So this is where current market price is, okay? Now, what we want to do is we want to follow the money. That's what we're doing. Remember, excitable moves mean money. That is what that means. So what we have to do is we have to follow the money in that point. Now, if we were to look at this, okay, we can see that the all-time high is right here, right? We can see that, and then we see it makes a lower high there, and it makes a lower high, and they're basically about the same thing. Then we can see what? It makes another lower high, right? And then we can see what? It makes another lower high. That's important. So in this specific example, okay, we can see the market is constantly making lower highs. It's having a push up. It does always have a move up, but it's constantly making lower highs, and it's going to make lower lows. That's what it's going and doing, okay? That's important that we want to pay attention to. Now, what we want to do is we want to find where like the lower, like where the trend kind of really begins. Because like here it goes down and yeah, it drops, but it doesn't really go and make follow through happen like this does. So you see how this one does follow through and this one has an excitable move, but there's no follow through. It just stops there. Or even here, like has an excitable move down, but it just stops there and then goes back up. This is our first move right here. So what we would do here is we're going to take our fib and we are going to take it from the wick and we're going to do this right here, okay? So we're going to take it in these points and we're going to make sure that we get this right on the, oh God, get this thing right there. There's the point. Make sure we get it at the bottom exactly right, just like that, okay? Now, what we're going to do, guys, the reason why we're not going way back over here is because we don't want to get a lot of meaningless fibs, okay? So what my method is going to do is it's going to show you how to be very precise, okay? It's going to allow you to become very extremely precise. And that is what we want, is we want precision. Remember, what were the 3 P's? patience, persistence, and precision. Okay. The map is what allows you to set up your system so that you know where to be patient at, meaning you know when the market gets in a certain level, you're going to buy and sell. When the market gets to this point, you're going to buy and sell here, right? But now what it's going to come down to is how you become very precise, right? You're going to be persistent on following setups. But when you become very precise, this is how you become very precise. You have to wait on strategic things that happen, okay? So this is your point. Now, what I want you to understand is this here, like in the fibs and stuff, you're going to measure these fib levels, but you're going to do it in relevance to price. Now, what I want you to do is basically, so let's do this to make it easier for you. I don't want you guys wasting a whole hell of a lot of time in doing this, okay? So when you get to the monthly chart, I want you guys to keep it probably around, so see where I pulled this over here to here? I want you guys to keep it probably around a 40-month range. Like, I don't, and what I mean by that is when you guys are measuring these things, I don't want you to pull the dang box all the way across the here and think you need to measure this whole thing. No, I just want you to keep it. It's going to be kind of like this, okay? You're going to kind of try to keep it in a range of like that. It's going to be about that kind of range right there. Like that's what you're going to want to do. You're going to want to keep it right in this level, right in this point right here, and you're not gonna want to put the boxes any like larger than that. Okay, so I just wanted to make sure that you guys know that. So now here's how we're gonna do this, and I forgot, it's probably gonna stay in about this type of box right here. So let's just show you the size, and let me tell you, this isn't the most important thing. I'm just showing you this is about a 2,000 pip range. I usually try to keep them in that. That's 2,000, basically 400 pips, right? So don't make it much wider than that. All right, so now let's get into how we're going to do this. Okay, so this is our first area that we're going to do. Okay, right in here. So if you watch how I do this, I am making this right here. This is our point there, and I am going to put the next point here, right there, because that's where price is at. And you can see price is trading right in this range right here. It hasn't traded out of that, okay? So that's where currently price is trading. Now, it would not be wrong for you to extend it all the way over there because you're going to see that this is going to play a resistance all the way over there. That's fine to do. But what I need you to do is I just need you to know that this is a resistance zone over here. So if you don't pull this all the way over there, just know that's a resistance zone. And remember, what was once resistance now becomes a support. So price is looking to come back and play a support on that. All right. So I just want you guys to keep an understanding on that. Now what you're going to do is you're going to take your TT, the big T and the little t. You're going to take it and you're going to set it right here. Okay. What you're going to do is you're going to say fib, right? Fib 1, right? Fib 1. And this is going to be 78.6. And actually, let me do this and put M, because M stands for monthly, okay? And that's what that stands for. And you're not going to keep it that big. We're going to make this smaller. So you want to keep it probably at about 9. It's probably a good one, maybe 10, right in there. Now, I kind of skipped over this, but I'm going to do it right now. Then you're going to take this right here and you're going to circle it right here, okay? You're going to put a circle there and you're going to duplicate that circle and you're going to put it to right here, all right? And what you're going to do is you're going to take the double T and you're going to put 1 right there. And you want to try to make this probably like 20. Will be a good number right there. And you're going to put that as 1, all right? And then you're going to duplicate it and you're going to put it down here right at that level. So that means 1 right there. So that's fib 1 right there, monthly, because it's on the monthly time frame, MN1. It's on the monthly time frame, okay? And 78.6 because that's what it represents. So see that? So that is your fib level, and you're going to keep that on there, okay? Just like that, there. So that's going to be your point. And then delete the fib. Do not keep the fib on, delete the fib, okay? Now here is your next excitable move right here. All right. This comes down to here. Now this is your all-time low. Remember, when the excitable moves happen, you want to put it at the wick at the low, the all-time low, and then the wick at the all-time high of the excitable move. So this is it right here. That's the excitable move. Okay. So now we're going to go, we're going to take this and we're going to pull the fib. Remember, downtrends are always right to left. Okay. So there's our wick right there. So we got it. Make sure that we get it right here at that point. And now we can see that price is currently inside of this move. Now it is important that you mark up the ones that are there. Now look at this. So here's what we would do. We would take this and we would put this here. Okay. We're going to duplicate this over here. This is going to be 2 right here. Here's your number 2 there. We're going to take this down to the next one. This is your next 2. And we're going to get our little awesome ellipse, whatever it is. And we're going to put that right here. Okay. And now what we're going to do is we're going to mark up our next level of fibs right here. So perfectly, it must be precise, guys. Like it can't be off at all. Like you want to get this thing perfectly. We're going to put it here. Okay. Right at that point. And then we're going to put the next one at this level right here at that point. And then we're going to take this one right here. Now, what were we going to notice? Okay. And what you guys should notice is that you have a singular line here, and then you have a dual magenta line here and one here. Okay. This is what we would call marriages in the market. Okay. Meaning it is an area where 2 Fibonacci levels or key price action points marry in one place. Okay. So if you need to re-listen to that, pause it and re-listen to it. Because what this serves as is it is a more dynamic and stronger area of reversal. Okay. All we want to know in the market, guys, is where does the market have the potential to reverse at so we can make money? That's it. That's all we care about. Okay. So if we can find the zones that are best suited for us to trade, that's all we really care about. So what we do here now is we take our little box and we place it perfectly right on the level, just as I have done right here. Okay. Literally as perfectly as we can get it. We're going to place it right here. So you don't want to have this off literally at all. You want to keep it as perfectly as you can get it. And I'm going to try to get this exactly at the bottom of the box. Come on, you little fool. There we go. All right. That's where it is. All right. Now what we're going to do is we're going to fix this. And we're going to say, okay, fib 1, M, right? Now we're going to put a slash in there. Then we're going to know that this is going to be 2. Okay. And then we're going to put M back in there. All right. Because it's monthly. And we're going to put 38.2 because that's what that represents. Is it represents 38.2 at that point. That is what that means there. All right. And you want to try to keep your fibs. I like to keep them under about 150 pips or under. So this is about 142. So I like to keep it in a smaller zone. All right, because the larger that they get, the more complex they are to trade. So if you keep it in about 150 pip zone, that's good. Like that one's 142. This one right here is 54. Like that's just being very precise. Okay, that's all you're doing is you're just being very precise. Now we're going to duplicate this and we're going to put the next level is 50. So notice this is going to say fib. This is going to say fib 2. All right. Fib 2. 2. This is going to be 50. This is going to be M. That's what I was trying to do. And this is going to be 50.0. All right. Right here. That's fib 2, 0. Okay. Because it is fib 2. This is 2. That's that. And there's the 50 right there. Okay. So I'm going to do this. We're going to do the same thing. It's the same. It is, this one is the 61.8. Okay. 61.8 right there. Here's our point there. And my goofy self forgot to put the marriage on there from the bottom one. So we got the first one. Oh man, what was that? That was the 127.2. So I'm sure maybe some of you guys might have caught that. And then the bottom one is 78.6. 78.6, okay? And that's what this one represents right here, okay? And then we're going to put our box in there. Try to get it as exactly as perfect as possible, okay? Now let's go over what these mean, okay? So I'm going to delete this off of here. These are the levels. Now notice, but actually before I delete this, notice I have done a markup of where the current price is at. Like this is right in this range. It's not all the way up here. It's not all the way down there. And notice it's these fibs that are currently where price is at as well. So I'm not measuring this excitable move here or this one right here all the way over there, because guess what? Quite frankly, when you have the ray on in the fib, guess what? It can go all the way over there. See how they almost match up? Like they're very close to that. See how they're very close to each other? So I had to deal with that in the beginning. I had to go and figure this out on my own. This is all a method I came up with on my own. No one taught me this. No one taught me anything I'm showing you. This is all something that was self-taught to me. Okay, I've never read a trading book in my life. I've only just done things on my own in the market. No one ever has sat down and mentored me, and I've went through and reviewed videos like we're doing. Okay, so I am going through and telling you exactly what you need. Like, you do not have to waste your time in going over there. You're just going to do exactly as I tell you. And the beautiful thing, guys, if you haven't done it yet, I have live webinars where I go over the strategy in person, or well, on the webinar, and you guys have a Q&A session. Okay, so don't stress about that, and they're recorded too, so you'll have them too. But I mean, that would kind of defeat the purpose, because you could go back and watch these videos. So now, okay, I'm going to delete this off of here. Now notice, you see that there is a fib 2 right here, a fib 2 here, like 1 1. There's one, even though this is number 2, there's only one fib there. Everything that signifies these blue boxes are 2 fibs, okay? 2 different fibs, meaning when you have more than one fib in one level, it's a stronger area of support or resistance, okay? That's what I want you to take from this. It will be a stronger area of support, and it will be a stronger area of resistance. So understand that as we move forward, all right? So now what you must do is you got to find the next area, okay, of where the excitable move is. Now, where's that at right now? Okay, it's right here, because there's your hook. So you are going to come in and you're going to measure this, okay? You're going to come in and you're going to measure this exactly as it is. Get it exactly right. And what you're going to notice is that price, by no mistake, guys, it lines up with previous levels by no mistake. I don't want you guys to think that this is by a mistake at all. All right. So these things, they matter. All right. They all matter in the grand scheme of things in doing this. So what you're going to do is you're going to go mark it up and of what it is. Now this is going to be 3, and this is still M, because it still means monthly. Okay. And that at the top up there is the 127.2 right there. So see that? That's 3 different fibs in that point right there. Now you'll just duplicate this. You're going to put a 3 there. Okay. This is going to be your 3 zone right there. And then you're going to put your 3 at the top up there. And this is going to be where your 3 is. You're going to go up and duplicate this and put this up there. Get that up there like that. Don't make it too large up there. And that is your level right in there. Now you want to go in and get all of your marriages as perfectly as you can. Now we just did that one. Notice there's not one right there, but look, price just flies through there. Notice there's 2 right here. Okay. Now you don't have to put, if you don't want to put it precisely right there, you don't have to put the next one there. Just to where you know what this means. Of course, all you guys should knows what these mean. But notice how it actually had a rejection level at that point. A little bit. You can see wicks. You can see price struggles. Like this is one of the closest things that I've seen that is accurate, like ridiculously accurate when you get this down. Um, it's ridiculously accurate. But you have it on the bigger time frames, it looks a little different. But it is very, very accurate once you start to see these on the smaller time frames. And this is 3. So we're going to get that 3 right there. And this is also the 61.8. There we go. There's the 61.8 at that point right there. And right here, we can see the 50 flies right through there. Okay. So we're going to put that over there here. And we're going to put 3. And we're going to do our M in there. Boom, like that. And that is the 50. 0 right there. Okay. So what we can see now, guys, is our strongest area is right here and right here. Okay. The market hasn't gotten there yet, but when it does, I can guarantee you that there's going to be something that happens at that point and that we're going to really enjoy. Okay. And that we can make money off of. So there's our points. These are all of our areas. These are all the points that we have on our monthly time frame. Okay. I know this is a lot in this video. There is a lot to do within the video. But if you just continue to practice this, you're going to get better at it. So that is our excitable moves on our monthlies. There's not really, you have this move right here that happens, and then there's your retracement, right? This is your one right here. Next, what you do, and I'm going to have to adjust these things. I'm going to have to pull these over here because I already know how these things are going to, they're going to, as soon as you adjust your chart, guys, the things are going to move. So I'm going to go down to the weekly. This is the first time this is the first time you probably went down to your weekly on this. Okay. So now we're going to go, oh, of course, in the video, it does this. Oh, you got to love it, man. All right. So I cannot stand this, man. Got to redo this. I have to re-log in because this goofy thing. Give me 1 second. It will do that. It will come through in a second. Because it's important that I get you guys to see this. Hold on. All right. We're gonna get this. Bear with me, guys. Sometimes if the chart ever does that for you to you guys, it's not the end of the world. Oh, that's awesome, isn't it? Oh, you gotta love it. Okay. So that thing definitely deleted all the work that I had done, and it does that. But you know what? I finesse these markets on the daily basis, so I'm not even tripping about it. You know why? Because I already got a markup of this bad boy on the other time frames. So I'm not even tripping about it. I just redo all my markups for everyone. Oh, dang, my screen's not even shared. Okay, there we go. Screen should be shared now. All right, so the screen should be shared now. We're good. Now, what I was going to do, this is one I've already had marked up, okay? So I have this, the lines are all the same. This is still where the fibs were at this point. This is still where they are here. They're all the same, but what's going to happen is these are our fib 3s in that point that we had at this level, at these current market prices. We had these points over here where these were, and at these points, okay, so these levels here at this point, this is, and actually I have my lettering messed up now that I see that. My lettering is actually messed up. This would actually be number 4 right here. Sorry, this is very confusing, but it's going to take, it would end up taking me way longer to redo this. This would actually be 4. This would be 4 right in here. Okay. This would be 4 right in here. It would end up taking me a very long time to go and redo all of this, and I need to keep it moving for you guys. That is for this one right here that we did was 3 for you guys right in there. Okay. And I'm going to do this because this is the excitable move. So we went from here. So let's just get this in over here. We went from here at this point, and I had all the marriages here at this level, at that level, at this point right here, and I had the marriages here at this point as well. The marriages are still the same; it doesn't change. And what we did was we came down to this time frame, the weekly. You are going to go monthly. Weekly is going to be your next point, and that's where we went to. Now notice the time frames. What they do is they tell a different story whenever you go down to these time frames. Okay, whenever you go down to the next ones. This is the move that we had right here. This was the move there. And then at this point right here, this is your next excitable move in the weekly. So see how it goes up at this point right in here. It comes up, it holds, and then it drops down at this level right here. You have to go monthly, weekly is your next, and you have to find your weekly excitable moves. This is your weekly excitable move. Now, this is a chart I've already pre-done, like one that I've traded from, and this is the point that we did here, okay? So now you see what I placed in there was 3W38.2. Now, this is obviously 4 because of the one that we did prior to, all right? This one here is my point there. This would be 4. So let's make sure that you guys are following me here. Okay, right there at that point. This would also be 4 here as well. It'd still be W. You'd still put the W in there. Okay, this would be our marriage right in here, all the way through there. Okay, and this one comes down here at the 127. All right, and this would be, I did not want to get that. And this would be, can you please stop? Good Lord. And this would be 4 as well. Okay. And this is what it had done, guys, is it deleted my markup, like everything. This was, here it is right here. There's nothing on there. It completely cleared off my entire markup. So I would have to go and redo the entire thing. That's why I did not want to do that, because it was going to end up taking obviously like 5 to 10 minutes for me to go and do all that. So now I went to the next time frame, which is the weekly. This is your next excitable move right here. All right. And this is where price is at. Now see how it's playing resistance to the 78.6. It never quite made it to the 61, right? And let me get these exactly right so they're not off, so you guys can see. So yeah, it never quite made it to the 61.8. It made it to the 78, right? So the next area, now what these represent, guys, is the areas in which we want to know where price is at. So once we go monthly, weekly, we're not going to go to any other time frame. So once we get that down, see how there's no other excitable moves to measure anymore? So we would delete this off, and this is how we read this now. This is what we are looking at. This is what we pay attention to. We only want to see price reach these levels of the marriages. That marriage, this marriage in there, this marriage in here, and this marriage in here. The one that have the most numbers on them, 1, 2, 3, 4, 5, 6, whatever. The ones that have the most areas on the chart, the most fibs with M's and W's on there, the ones that have those are the ones that you really want to trade. Those are the ones that we're going to wait on, okay? So what you guys are going to do is you're going to go and mark up the monthly first. So measure all of the monthly excitable moves. So if we go over to this blank chart here, all right, and relevant to price. So we're not going to worry about everything over there. We're going to worry about what is exactly over in this area right here. So where current price is current price is currently there. Okay. So we can see current prices at this level. So we're worried about the excitable moves that are near where current price is, like this one, and then the follow through there. Okay. There's that one right there, and there's the follow through to the upside. That's what we're worried about. And then we're going to get it to where it looks like this at this point right here. And then we're going to trade in the zone of where these are right here. So in the next video, I'm going to teach you how to read them. Okay, so I don't want you to like be like, well, what does this mean here? And I'm still kind of confused and I'm still not sure what all this means. Don't worry. I understand if you're there at that point right now. But I'm going to teach you in the next video how to read them. So what you must do is you must get these right. You must go in and do the markups first, okay? So you have to go in and do all of the markups first. You have to get them done, all right? And if the market doesn't have an excitable move in it, like if it like looks really complex, Like notice how Euro USD, we're going to look at this. I'm going to show you guys this. Okay. I want you guys to see it. See how it's very trendy, like it trends, and it's very nice. It looks very nice whenever it trades. It's trendy. Let me show you a chart that doesn't have let me show you one that is not trendy. And I don't want you to focus on charts that are not trendy. Okay. So we're going to go to USD Chef and we're going to put it on the monthly, and you're going to see what I mean. So see how that's not trendy like at all. See how it just kind of like sits. It's just sitting in one direction. Like you can see it's trending over here, but it's like there's nothing. Okay. I just want you to focus on the charts that are more trendy. Okay. Because we're focused on catching the follow through. All right. That's what we're focused on getting. So you don't have to worry about the ones that aren't as trendy. Just worry about the ones that are. Okay. GBP USD is good. Gold is good. Odd USD. GBP JPY is good. USD JPY, you know, those are good ones. Just some suggestions. But do not worry, like I said, if you can't read these yet, because I haven't taught you how to read them yet. I just showed you how to do them. Okay. So everything I just said, make sure you go and do that. So get them done. And then in the next video, I'm going to teach you how to read this and what it actually means and how we can actually understand what in the world is going on. Okay. So that we can see what these numbers mean. We can see what everything means. And I'm sorry that that the charts did that. Sometimes they do that. It's very annoying. But it erased everything whenever I did that. And usually it doesn't do that. It keeps it all on there, which it ended up doing that. So yeah. But in the next video, it's going to be how do I read the marriages? So that's what we will be going over in the next video, guys. So I'll see you soon.